Then let's look at this important risk management framework from Institute of Internal Auditors. So this is called 3 lines of defense model. It's widely adopted after the 2008 financial crisis, widely used in the financial service industries, but also it applies to other industries as well. So first, you have a first line of defense. So this is within the business, within each line of business, whoever manages the product, they need to exert some management controls because they understand the business, they know what the risks are, so they should mitigate that in the first place. Okay, so also within the first line, there should be some internal controls, right? So double check, have an additional set of eyes, make sure things are done properly. So that's the first line of defense. Then there's the second line of defense. There's a few corporate functions, for example, financial control, security, risk management, quality, inspection, and compliance. So second line of defense is supposed to bring up a credible challenge to the practice of first line of defense. All right, so if there's any loophole, so second line defense can point it out, right, and work together with first line to perfect all the process, reduce risk. Okay, so then you have a third line of defense. This refers to the internal audit team, right? So they review the practice of first line and second line, right, to see whether they are doing their own jobs. So usually the internal audit will work with first line, second line once a year, depending on the different areas. So different emphasis. So then this is how you have 3 lines of defense, right, to look at the same areas to reduce the risk. All of the 3 lines report to the senior management. So they are executives responsible for the day-to-day operations. Third line of defense, internal audit also report to the board. So there's an audit committee. So if there's any issue, the board audit committee, they can talk to the executive team. This is within the business entity. Okay, then outside you still have external audit. There's an independent review, right? So just in case sometimes internal audit, maybe they are influenced still by the executives, it's possible. Then you have also the regulators, right? So they come in, they look at your practice, then see there anything you should do better, right? So they can bring in the knowledge from the regulator as well as from what they have seen in other entities within the same industry. So so that's the 3 line for defense risk management framework.